Happy Wednesday out there, Team 42. It's your skipper here, Darius Dell, to present our macro minute for Wednesday, November 20th, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you'd like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So today's key macro question is, are asset markets on the precipice of a global refinancing air pocket? Our answers are perhaps. At the bare minimum, we should consider this bearish outcome a reasonable probability thanks to recent signals observed via our daily Bayesian inference process. Moreover, there are several key macro questions that remain unanswered heading into year end. Number one, will President-elect Donald Trump's pending Treasury Secretary nominee represent a hawkish shift in U.S. net financing policy? Number two, will the debt ceiling moratorium be extended well into 2025, thus delaying roughly $700 billion of TGA spend down? And number three, will our resilient U.S. economy and sticky inflation themes render the Fed powerless to tone down U.S. dollar strength and bond market volatility, two key countercyclical leading indicators of global liquidity? The answers to those questions may prove to be quite bearish from this starting point in the positioning cycle. Investors must be vigilant to preserve what has been another fantastic year of 42 macro-inspired gains. Transitioning to our 42 macro dashboard here, as always, to wrap up with the question from our community. This one's regarding currency and circulation versus broad money supply. It says, hi, Darius. Thank you for all the wonderful content as always. I've been trying to learn about central bank balance sheets and have a question related to the 42 macro global liquidity proxy, which is defined as global central bank balance sheet plus global broad money supply plus global FX reserves minus gold. So the questions are currency and circulation versus broad money supply. On the Federal Reserve's balance sheet, does this line item currency and circulation overlap with broad money supply, which I assume corresponding M2, or are these separate things? So the currency and circulation contributes to broad money supply. So obviously you have currency and circulation, you got bank reserves, you have narrow money, and then you have broad money. Broad money supply includes everything below it in terms of the calculation there. In terms of getting back to the question, foreign currency denominated assets. Regarding the line item foreign currency denominated assets on the Fed's balance sheet, how does this relate to the FX reserves component of the global liquidity index? So those are the FX reserves. Obviously, the U.S. doesn't keep many FX reserves because most of the world trades in dollars, and we don't need to keep a stock of Chinese yuan or euros or British pounds on hand to assure that we meet our import needs. So, but yes, the answer to the question is yes, those are our FX reserves. So we'll wrap it up there. Darius Dell presenting our macro minute for Wednesday, November 20th, 2024. Everyone have a wonderful day. Best of luck out there. Catch you back here tomorrow. Actually, yeah, catch you back here tomorrow. Cheers.